Okay, so I'm going to be making this video to just basically outline my outlook for this month and basically read the story of price action for these indexes, specifically US 30 as well as the dollar index. So this is more of a journal for myself to, you know, express what I've learned so far, expand my learning, overview my insight, and really hone on my craft and just expand, my skill set. And so yeah, but I do want to just put this out there. If anybody resonates with it, they could maybe get some insight from it as well. At the end of the day, you know, we learn from our experiences and we also, get insight from others as well. So the way I look at the markets is strictly from ICT's perspective. I came into the trading game a few years ago and I was kind of gambling for the first couple of years, but I found ICT, and so my entire mindset is basically from him. Um, I'm in his mentorship, so I've just been learning everything, and I analyze price just based off of what he taught me. So I'm gonna start with dollar index. Hop on the monthly chart. So we had these levels outlined. I just erased the charts. Got this monthly fair value gap right here that we tapped into. I did believe when we were around like end of September that we might be running for the equal highs here. This is where the liquidity is on a high time frame basis, but we did have this imbalance here as well as this order block, which now looking back, you can see that it had a clear rejection from. So this right here is that monthly level. Just want to outline that. We tapped into it on the monthly. We first tapped the discount low and then we tapped into the premium high. Then we kind of consolidated a little bit and then we saw this huge expansion. So looking at this on the monthly, you know, we have this order block right here. Curious to see how it reacts within this wick. Um, maybe it could tap into the 50% of it and then retrace a little bit higher, or it could just go straight for this. I think this is the next draw on liquidity. If we break below here, obviously we have this fair value gap right here. And I'm sure we have some kind of breaker with this price action here. Gonna drop down into a weekly. So this high would this high actually aligns with that monthly order blocks open. So I'm gonna go ahead and mark that as the monthly order block bearish, bullish order block open. So I believe this is probable draw on liquidity. Looking at it on the weekly, we have this low, the swing low that was taken out. Now, when we look at swing lows, it's obvious that we have sell side liquidity resting below it. That's where the market is likely to draw to if it's bearish. So looking at the last couple of weeks of price action, we had a huge expansion down. So first around here, I guess, we tapped into these, premium levels. Then we came back down the specific week, October 3rd. We rebalanced this fair value gap, ran back up to this area right here. We saw a big expansion down this week right here, came back up into that order block, and then we saw a huge expansion. Now, this run on this fair value gap, where we just went above this high right here and then rapidly expanded lower. Um, that right there is obviously bearish price action. Like we're rejecting this level without coming back up to fill it. So that gives us a clear indication that we might be pushing even lower. Like if we're not consolidating around these areas, um, we're likely to push lower. So um, this low right here, obviously, I don't know if we've taken it out, but this is the next draw on liquidity. We're likely to take it out. It's also at that bearish order block. It already came down here once and then expanded, so it's unlikely to do the same thing. And I don't think we're going to be running back above here either. I'm just going to mark this. And there we have a fair value gap along with a bullish order block right here, which aligns with the monthly order block. Now, when we have arrays, or when we have these levels on higher time frames aligning with levels on lower time frames, we're likely to see a pretty big, we're likely to see a reaction at it, like one way or another. We can take advantage of that reaction by, day trading, intraday trading, scalping. But this right here is the probable draw on liquidity. We're likely to take out this low. We may consolidate a little bit and then expand lower. But that's what I see. Now, going on the daily, create a little volume imbalance here. Got that low, got these equal lows here. So just looking at price action, excuse me. If it does want to make an exaggerated run lower, we're obviously going to see a huge push up on, you know, index funds, anything that's priced in dollar. Is that likely to happen? I don't know. I don't think so. So in 13 days, we have the day where the Fed is going to either raise interest rates by 0.5% or 0.75%. Now, if it raises it by 0.75%, that means that their plan on controlling inflation is still being attacked hard, and the market will probably see um, a huge repricing lower. But if they only increase interest rates by 0.5%, then that's the first time that in a while that they're making a lower increase, and that is a turning point known as the Fed pivot. And if that's the case, then we're probably going to see a run higher. And I like to just like compare that analysis with my understanding of price action, seeing where we are, and if that aligns with whether the premise of it being raised by 0.5% aligns with bullish price action, or with the premise of it being aligned with, I mean, with the premise of it being raised by 0.75% aligning with bearish price action. So all interesting stuff. We'll have to see what happens next week. Today is Thursday, so we have one more day. Now, daily level, as ICT says, is where there's the clearest levels of liquidity. It's the clearest levels of liquidity, meaning you're more likely to anticipate where price is reaching for. For example, we had this nice fair value gap with this bullish order block that we tapped into, and then boom, we fell lower. This was that fair value gap as well. We closed the fair value gap here as well. So we have a lot of price action that supports a push lower. So I would target this. Honestly, we'll have to see what happens after we take out this low, because again, like it could retrace from here. We don't know, so we'll have to keep that in mind. Like it could just sweep the low and then start moving back higher. And if that's the case, then we'll see stocks just fall much lower. So that's as far as I want to go. Maybe I'll hop on the 4 hour. We can see just like a cleaner price action. that order block right here, this order block right here, or this fair value gap right here. And then on the 1 hour, we saw this week where we, made a push higher. And then when we got hit with the news yesterday, which Powell was more dovish than usual, I guess, we saw a huge repricing lower, which saw stock indexes move higher. Now, stock indexes, I primarily trade US 30. So I've been keeping track of this for a while now. We're at a significant point, in my opinion. We have obviously taken out this monthly high with last week, and we're within this bearish order block right here. Now, this bearish order block, I like, learning from what I've learned with the ICT, the 50% levels of it are significant. So I've seen price, react nice with the 50% of order blocks. So anyway, I'm just gonna put this down right here. 34, 30, 34, 340.8. Yeah. So these levels, just basically simplify. It's just you can look at it as support and resistance, but it's where liquidity lies in. The market is booked off of liquidity. Like, price is not random. This is something ICT says. You can tell who's learned from ICT by how they speak, because they'll be using his terminology and like mixing it up with like retail or regular price action talk, like supply and demand and whatnot. But yeah, but these markets are 100% controlled, and they're booked off of liquidity, meaning that they're seeking levels to tap into for uh, to tap into liquidity. It's as simple as that. Anyway, 50% of this body's bearish order block. I want to note that. We'll do monthly bearish order block body 50%. We'll just put that right there. And then we got this monthly high. So we saw this. This was a wild week, by the way. I'm gonna go into what I traded today. So this level right here is also significant. I don't know if ICT taught this, but I'm just gonna put it down here. See, I'm reluctant of speaking of what he taught me in mentorship, because I don't know if he made it public for on his YouTube channel. But yeah, this is you can call this just a random level, I guess. We tapped into that, and we now closed below that monthly order block and below that monthly high. The fact that we tapped into it in quick succession and then moved back lower makes me think that, okay, we tapped the liquidity. Now maybe we're going to go lower. And if that's the case, then that would align with the bias of us on dollar index taking out this high and then maybe making a sweep higher. Or maybe this thing's going to push lower while this consolidates, because that can also happen, and then makes a rebound higher into this level, possibly consolidating, whatnot. And then this obviously just goes much lower. So I always like looking at correlations because it's there, but sometimes, you can have this consolidating, and then like the market, the algorithm, repricing the indexes wherever they want to reprice it at, basically. So anyway, looking at price action, we see that we tapped into this level. I think that was yesterday. With yesterday's price action, we tapped into it, and I believe it was Yeah, it was when he spoke. So he spoke at 1:30, and then we saw this thing just go completely higher. And you can see how we're just slightly above that level, and then today we broke below that. It was a pretty strong repricing in my opinion. The way that we repriced to that level of liquidity. We ran the highs right here, ran the buy side liquidity, and then we repriced lower. That's all very significant price action just to look at. Like if you want to have an idea of direction, like just take a look at this. Price is seeking liquidity, so this could be a possible reversal. You know, mm, fucking okay, monthly high right here, and then monthly. So, because honestly, I'm not super bullish on indexes. I knew that we were gonna see a repricing. Like when we were around here and we came back up, it was pretty clear that we're gonna take this out. And this area was super clear to me. Like, so look at this. That level on the higher time frame, it aligns with this bearish order block. So we can just call this a daily bearish order block open. You see, we have this fair value gap. We have this bearish order block. We tapped into it with yesterday's price action. Not only that, we cleared the buy side above this high. We tapped into it, and then we cleared the short-term highs on the 1 hour, and then we repriced lower. So my honest opinion is we've seen, we've possibly maybe have seen the top. I don't know. We'll have to see, but the price action does favor that. Because if we're going higher, then, you know, I'd be looking at, again, I have to be careful to speak in absolutes. I'm not really trying to predict where the market is going, but at the same time, I'm trying to like create possible scenarios, and whatever price does, I'll be prepared to take action when that happens. So if price happens to break above these levels, I would look at the 50% of this wick to be tapped into as a possible draw on liquidity. So that 50% level is 35.06. All right. 6.0. Yeah, so that's the level to have. That's the 50% of the weekly wick. All right. But yeah, I don't know. It, just the fact that we tapped into such a high time frame level, I'm looking at this order block, this fair value gap to be tapped into. That's 150 to 300 pips away. And if we do, seeing how we trade below that price action, then I'll take a look at some higher time frame, some longer time frame objectives. But this thing can move. This thing moves really fucking fast. So yeah, if we have an exaggerated move, then I do look at this area. We have this low, obviously, that needs to be taken out. This low, and then this area, this huge fair value gap with this order block. So that's going to be something interesting to see how it unfolds. And I do think either this or this is going to be taken out. Um, in the next by next week, by maybe not by next week, but like by the 14th. So something's gonna happen. So we have that range right there, this and this, and interesting enough, we're at the 50% level. So that's something to note. Obviously, we have this order block. If I was taking a short, I would look to exit probably around here, depending on where I get in. Now, the trade that I took today, I took it right before market equity opened at 9:30 a.m. Eastern Standard Time. I took a quick scalp. Literally, it was like 2-3 minutes. I'm primarily a scalper. I like to get in and get out really fast. Um, I took it right here. So I took the trade around here and I put the stop around here. I think ICT taught breakers. So I'm going to note my insight on this. So we have this breaker, which is a high, a low, a higher high. This high right here broke the high over here. And so that shift in price action being confirmed by a break below this low right here, that's where I was looking to short it at. And so in theory, with the breakers is we have a high, we have a low, we have a higher high. If it's bearish price action, this high is taken out, this low is taken out. And so if it comes back up to the last down close candle of this swing high, then of this price action movement right here, then that should see price act as resistance. And so I just took the entire candle just because it's a 1 minute time frame and this is only like 50 pips or so. So I took a 1% risk, um, like around there. I put my stop, I think 40 pips. And I actually got out 49 pips. So I think I put in 50 pips or so. Something like this. Yeah, I think it was 40 pips. And I got out at 49 pips. Something that I'm trying to work on is holding my trades. It was very clear to me that this thing was going to sell just based off how fast we moved yesterday, the fact that we tapped into a high time frame level, and the fact that we had very clear levels of sell side liquidity resting here. Like this low to this low right here was an obvious area that we were going to tap into, even if we were going higher. Even if we were going higher, this is likely to be tapped into because remember, price moves based off of liquidity. Where is the liquidity? Well, it's resting below these lows right here. What does that mean? That means that people are going to be buying, or no, sell side liquidity. People are going to be selling below these lows. So we swept it, we came back up, and then we went back down, and 10 a.m. was when we had the high impact news event, and that's really when we really saw price action move lower. So yeah, I was kind of bummed. I'm not gonna lie because I got out at 1.25%. I took a few more scalps afterwards. I ended the day at like 1.5% almost. But if I just held it for like 10 minutes, bro, or like an hour, um, that would have been crazy. So anyway, my original target was right here. It was actually, I believe it was below this low right here. Or actually, it might have been a little bit lower than that because I remember it was a 1 to 4. I think something like this, bro. I'm not gonna go into detail with that trade. So here's where we're at. We're at these high time frame levels. Like we're at that monthly order block, and we're at that monthly high. and we failed to break above it. So we'll see how price reacts. We have an order block right here that we're at. We're inside of a slightly bigger fair value gap. Looking at it in the 1 hour, we tapped some of this fair value gap right here, took some liquidity, came back up, and then we closed out this 1 hour fair value gap, and then boom, we priced lower. So where is the next area of liquidity that we're likely to tap into, and how can we frame a trade around that? We'll have to see how we trade overnight. I'm gonna hop on the charts probably around 9, around 9:30 a.m. Actually, I don't think I can do that. I have something that I need to attend to. So maybe it'll be a little bit earlier. So we'll see. So 7 a.m. is like New York Open. Looking at how we traded 7 a.m., we had, I guess, we just targeted these highs. My point is we saw the real move happen at 9:30. So if I were to hop on at 7 a.m., I know, and I would be looking to sell, it wouldn't be ready just yet. And then 8:30 we had some news come out, and then it created this price action, and then 9:30, boom. So we'll see. Um, we have this order block right here, 15-minute order block. Have a fair value gap here. That's the daily fair value gap. I think that this is going to be a draw on liquidity, and if it creates a setup for us, then we'll be taking it. Um, I would like to see it kind of just consolidate around here and then make a move, but it's probably likely to make a move overnight. We'll probably see it, maybe tap into it, and if that's the case, then um, I'll be looking to take shorts around these levels probably. Uh, just marking this low right here. So this low right here swept this low, and then that's when it shot up. That'd be interesting to see if we just overtake all of this. And if that's the case, then um, we'll have our answer to the repricing. We'll have our answer to the Fed increase. Some more levels. The hourly low right there hasn't been tapped into. And at the same time, we have this objective right here. So we'll see. Overall, I think my premise is bearish. Um, I think we're going to see a repricing lower. Now, when we look at it on NASDAQ, we took out these highs right here. We have some price action here. Obviously, we have a clear fair value gap right here. So, and an order block as well. Looking at S&P 500, we're at this order block right here, but we did break above it, and so we may be supporting off of that level. But we'll see. We're still within that order block. 50% level. Take a look at this. This is why I like the 50% levels of order blocks, because you can see how it reacts. It doesn't really matter if the body, when it's a thick body like this, I don't think it matters whether you use the wick or the bodies. It's pretty much the same level. That's 4,091 and a half. All right, so let's take a look at this. It's probably gonna be very fucking clear. Take a look at that. Again, almost the same thing that happened on US 30. I mean, these pairs are correlated, so it's not a surprise. We tapped above that level one more time right here, and then we swept lower. Came back up, this imbalance right here, repriced lower. For me, S&P is clearly going to tap into this level. If I was ballsy enough to trade overnight, I would do something so, like something like this, bro. That could be a trade right there. It's a 1 to 1.5. So I'll just leave that, see what's up. I don't really trade at night. I like trading the volatility. I like to be on top of my trades, but yeah, just a little play. Why not? So yeah, that's that. This is my objective, I guess, and we'll see what happens tomorrow on Friday.